and thanks very much for all of you staying. I know we're the last act here, and Marius, if he's around, I think he was chatting outside. I think he's just poking fun at me because I know a lot about the inside workings of this this transaction. It's one of the great fish that got away from me as an advisor to real estate private equity, and I think that's why Marius put me up to doing this. But without further ado, because I know everybody's anxious to get to the bar, I want to introduce my panel, and I'm going to sit down in a second when I do the introductions, but I've got Mindy Lee here from CPI Property Holdings, and Mindy is the responsible for corporate strategy and also a secretary to the board of directors of the group. She has 10 years experience in real estate and specifically an expert in the hotel and hospitality area. She received an MBA from Lausanne. She was with groups like M&L Leisure, GIC, the Singaporean Sovereign Wealth Fund, and prior to that with Deutsche Bank in her illustrious but short career, because she's quite a youngster here in that regard and has really accomplished quite a bit. And if you have not heard of CPI, because it's not necessarily on everyone's top list of big property or big, let's say, hotel ownership, you'll certainly be hearing a lot more of them in the future, and hopefully after this panel you know a lot more about what they're doing and what they're thinking, and they're doing a lot. Next to Mindy, I've got Matthias Huber. Matthias is currently the industry lead for real estate at this little bank called Raiffeisen Bank here in Vienna. I'm sure some of you have heard of it. And he's been at Raiffeisen. He's a career Raiffeisen guy. He's been there since 2007 and has seen a lot in the real estate side, given the tenure that he's served there for the better part of 15 plus years. He's seen the booms, he's seen some of the busts, and now he's going to talk about a major deal that, you know, when I looked at the numbers, because I haven't revisited this in about a year, but it's significant in terms of scale, size, and the accomplishment that both these guys did, and also the bank and what the commitment they made for the transaction. So with that, I'm going to sit down, and I'm going to let first Mindy just introduce you a little bit to CPI, tell you a little bit more about the group and what they're doing, and I'll ask Matthias also to spend a bit of just 2 minutes on the bank, where it is today, and then we'll get into the deal. Let's call it the Gordian knot, as we sometimes refer to it, and we were joking about it before, because as you know, and what you'll find out about what CPI did in this deal of the year, very complex, very large, and they pulled it off. So with that, Mindy, why don't you give a little bit of background on yourself and CPI? Thank you.
Sure. Thank you, Tom. So maybe just to give everyone a quick overview of CPI Property Group, we are a 21 billion euro property portfolio company, predominantly invested in Central and Eastern Europe. 50% of our portfolio is in offices, about 25% in retail and retail parks, 10% in residential. And although it might seem a bit small in terms of a percentage-wise, we're about 5% or about 1 billion euros in property portfolio invested in hotels. In the hotels properties that we own, we are owner-operators. So we understand very much the sort of asset management aspects of the hotel operations. And lastly, maybe just to, you know, not be the only panel that does not talk about ESG, CPI Property Group, we're in the very forefront of the ESG matters. In fact, we have what we call a sustainability financing framework, and we have issued multiple green bonds as well as sustainability-linked bonds, sustainability loans, as well as other sort of capital markets and derivatives products in ESG or in this green format. Matthias?
Yes, thanks, and hi also from my side. Some of you might not know Raiffeisen Bank International too well. We are a banking group active in Austria and 12 additional markets in CEE. Basically, we are a universal bank offering retail, investment, and corporate banking services depending on the market and the size of our subsidiary bank we are operating there. Generally, our loan book in terms of real estate is roughly 5 billion, only here in Austria, where we're doing basically real estate financing cross-border in Central Eastern Europe, but also to some extent in Western Europe. In terms of hospitality, this is still a sector where we have been quite selective in the past, but been doing quite good business in terms of the projects we are financing. It's the share of the portfolio, I would say roughly 10% of what we are doing in hospitality. And there are several markets we are concentrating on, so it's not a huge variety of markets we are covering, but really covering more or less the hotspots in European hospitality. What we are doing there is solely financing inner city business hotels with lease agreements with international operators. So you could say we are quite conservative in what we are doing there, but even in COVID times, we have not adjusted our risk policy and stayed with this strategy. And what we've seen in our portfolio in the recent month, it has proven right.
Great, thank you guys, appreciate that. So what brought these two special people together was a very, very, very special and very eye-poppingly large transaction. Raiffeisen came to the rescue on a syndicate of 10 banks, and they assembled a line for CPI to orchestrate the kind of dual takeover of Immofinanz and Immo. And in that transaction, $3.75 billion were deployed as a means of financing those takeovers, not just that one, but those two takeovers. And between the inter-ownership and the cross-holdings between the two groups, they were able, CPI and Mindy's team was able to pull that off. We know a lot about the deal because we were out in the market a few years before that, working with Starwood Capital, the guys that bought CAMO prior to the mergers of Immofinanz and SMO into CPI, and talking to the capital markets as I did for a couple of years. Not everyone has the stomach or the wallet or, frankly, the let's say, the foresight to get into a deal, particularly at the time that these guys got into that deal and concluded that deal. So we're going to talk a lot about that deal and how kind of the inner workings of how it worked. And really, hopefully, we'll have a little bit of time in the end to talk about where we are today, because I think where we are today is a different world. We talked a lot about COVID, we talked a lot about ESG, we talked a lot about this, we talked a lot about that. I don't think anybody talked, maybe I missed a panel, sorry Marius if I did, the demise of Credit Suisse, the bank failures that we just experienced in the US. So it's a different world as of the past couple of 3 weeks, and I'm not sure there's been a lot of mention to that. I don't want to be the naysayer, to the guy who brings that point up. Remember I did a panel in January of 2020, and I was the only guy in the panelists that mentioned COVID, and I was like, there's something out there that I'm not really sure about. So I don't hope this is not that moment, but we're going to talk a little bit about that in the end. So without further delay, Mindy, why don't you talk a little bit about the behind the scenes of what brought you guys together in the deal itself?
Sure. So maybe I can start off, with saying that both Immofinanz and Immo, we've sort of monitored and tracked them for many years before we embarked on this acquisition journey. We saw them as peers and comparables. What we liked about their portfolio is the fact that there's a significant overlap in terms of the properties in the segments that they owned, the properties, as well as also in terms of the geographical presence. So we are if you look at the portfolio segmentation of Immofinanz and Immo, it's very similar to what we have in our portfolio as well. We are already located in many of the cities that they operated in, so we knew the market very well. So that's really the first consideration in terms of what what the rationale and the objective of these acquisitions were. The fact that, it's a bottom-up approach. We know the assets, we know the markets that these two companies operate in. And then the second part of the deal and our rationale behind it is the fact that CPI, in 2021, when we first looked at these acquisitions, we had the appetite to grow. And being at that point already a 13 billion euro company, it was really unrealistic for us to say, we do small acquisitions of individual transactions that would not really bring us much impact. And you were at a time in 2021 where most transactions were going at significant premiums to book value. So, we want to grow, we want to be smart in terms of what we acquire and at good prices. We saw that, acquiring these two companies' shares, which were trading at a discount to NAV, was probably a good opportunity and a great point, entry point for our growth strategy. And as you mentioned, Tom, before, this Gordian knot where there was, for historical reasons, Immofinanz had some shareholding in Immo and vice versa. This was due to, prior takeover attempts which weren't successful. And we believe that this also caused their share price to be trading at a discount to NAV. We felt that, the companies didn't necessarily have a clear strategic shareholder who can drive a focused strategy, and therefore we believe that by stepping in and acquiring a controlling stake in these two companies was not only a value add for ourselves in terms of growing the CPI group, but also for the minority shareholders of these existing companies.
Right, thank you, Mindy. So just to review the numbers, 13 billion, big number, to 20 billion, a really big number. And if we think about the actual hotel portion of it, it's $1 billion plus. These are all very, very big numbers. So this really became, and is today, a very, very significant, not just European, but global player in terms of real estate ownership and management. Matthias, you know this market well. When the folks came to you and said, look, we want to do this and we need 3.75 billion, what did you think? I mean, give us a little bit of background about what was going on behind the scenes within the bank, because that's a lot of money.
Yes, it is. But maybe to start, we've been following the whole situation on the Austrian real estate market for many years. And it has been quite interesting to see how the three biggest Austrian listed real estate companies have tried to take over each other, to merge, and without success finally. So it was obvious that the Austrian solution would not work due to various reasons. And so once CPI came up and told us what they are up to, we thought maybe that's what it takes to consolidate the players. And on an international scale, these players are still mid-size, I would say. So there is potential for them to merge, to scale up, and to bargain on these profitabilities and to have a common and more aligned strategic goals. So that's where we could clearly follow the logic and rationale of CPI, and that's why we were very happy also to support them in this takeover, because we know the companies very well. We know that there has been some stalemate where they didn't overcome their strategic cross-holdings, and therefore we were very supportive once we heard about these intentions.
Great. And I think, just speaking from some prior experience, it really took a regional player. To go to London, to go to the US, and to talk about a regional consolidation where some of the assets, diversified assets from residential to office to hotel, spanning Germany to Austria to, in some case, retail, sorry, a large portion of the, and profitable portion of the portfolio, was very, very difficult for most investors to consider, you know, minus the CPIs of the group who really understood it and had competing properties in those same markets. Coming to the audience really for hotel and hospitality, maybe Mindy, you can talk a little bit about, you know, what you see with the group, because I know that you guys announced divestitures of about $2 billion. I asked you earlier, and you said none of those are in the hotel space. So they obviously committing to build that 5% plus interest of the group in hotel and hospitality, which could be good for some of you guys. But there are unfortunately no sales coming out of the synergies of the mergers.
What I would say in terms of, you know, where we're looking for our sort of asset reallocation post the acquisitions of these two companies is more on, you know, shifting away from the lower yielding German residential assets into more higher yielding CEE focused office. So yes, we're not necessarily looking to decrease our exposure in the hotel sector. I think at this point, you know, in terms of expanding, whether it is into the hotel sector or acquisitions into other sectors as well, given where the market environment is and the fact that we've just taken over two large companies, it's more about streamlining and consolidating and making sure, you know, that the two acquisitions that we have are basically aligned with the CPI strategy as well.
Thanks, Mindy. In terms of Raiffeisen, how does Raiffeisen see, we talked a little bit about the hotel and hospitality, going forward, reading the tea leaves, looking into where we are in terms of interest rates and costs and complexities of deals. You're looking for opportunity. Are you guarded? Are the doors open? What's currently the flow as of the past 2 to 4 weeks within the bank in terms of what you're looking at and how you guys are treating new applicants coming in and saying, you know, I want 50, I want 100 to do a project?
So I think we're trying to push the door open to get more deals done. I already spoiled that we are very happy with the current performance of the portfolio, so we are not worried about any project which we are financing because we've seen over the last month the clear recovery, also even going and surpassing the levels of 2019. So in terms of counter-cyclicality, I think we are open to finance new projects. I mentioned that we are quite selective on what we are doing and still sticking to the same strategy. We would be happy to do more deals and in this respect. And also in terms of markets, I mentioned we are covering the main markets in Europe, and there we would love to see more opportunities. And you mentioned interest costs, of course, that's a big issue. And I mean, currently a deal without hedging is just not possible from our side. So there needs to be a quite clear hedging strategy in order to avoid the interest rate risk, which I think is still looming over all of us.
Thanks, Matthias. You guys probably want me to ask some of the hard questions, and the bankers hate to answer those questions when I ask them, but what kind of LTVs, what kind of interest rates, what kind of stuff are you looking at today priced in the market that you think is reasonable, or a range maybe for the audience? It could be helpful for some of the people who are thinking about projects or refinancing. What's out there? What's the price in essence?
Depends very much on which market we are looking at, whether it's Western Europe, whether it's Central and Eastern Europe, and also looking at the location itself, at the city, how resilient it has been in the past. But talking about Western Europe, let's say in terms of LTV, we have, I would say, 60% as a rule of thumb where we would be financing without big issues. Being at 50%, we would even go without any amortization over the lifetime. And in terms of interest rate, or to be more precise, in terms of margin, depending very much on the cash flow, because this is what we are looking at in terms of our rating model. It's not about so much about the value itself, but it's about the cash flow generation. And talking about the best rating class we would have, I would see roughly between 150 and 200 basis points for a tenor of 5 years, for example.
Above current rate, so
Yeah.
so roughly
Talking
about
about the
5% on a, if you're talking about 3% base rate. Good, that's helpful. Thank you for that. And I know it's a broad question, and I appreciate your specificity there. Mindy, I saw in your notes that you guys were looking at inflation and kind of understanding the environment of how that's going to potentially help the rates, both at the the hotel and hospitality side, but also possibly on some of the larger portfolios that you have, office, retail, et cetera. Is it working? Are you able to push kind of those rent increases through, or not really? Or are you getting pushback on the office side because people don't really know what's going to happen with office post-COVID? How do you stand there?
So I think to answer your question first on inflation and how that impacts, for our hotel properties, I'm sure many of you also have witnessed this in the last year. We saw, very stellar performance in our hotels, largely, probably due to inflation and the ability to raise ADRs and rates as well. But that's on the hotel side. Of course, there are headwinds in terms of hotel on the cost side that is impacting the overall performance. In terms of indexation and how we're able to pass that on to the office tenants or retail tenants, we're very lucky to be in Europe, or I would say more the Eastern Europe, Central and Eastern Europe jurisdictions where indexation is very common, unlike in the UK, or more I think in Germany, you tend to see more fixed percentage and not so much CPI indexation. We have been able to pass that on gradually. I mean, in 2022, the inflation was still quite low because you're looking, back 12 months. This year, we're seeing higher increase in terms of the indexation that we're applying to the tenants. Legally, there's no way for tenants to push back. They may grumble, they may, want to renegotiate, but legally it is contractual that we apply these indexations. We have done so at the start of the year for last year's indexation, which is much higher. We're looking at indexations depending on which number that you're basing, anywhere between 7 to 15%, depending on the country. So we are obviously working through with the tenants, and that's why I also think it's very important to have local on-the-ground experts and leasing managers where they are day-to-day speaking with tenants and being able to negotiate this better. And that's where, the niche of being property and asset managers come into play very significantly.
Wow, that's impressive. So you guys, anybody out there, hire these guys as your asset managers, because if they can get those push-throughs, that's pretty good. So I'm going to ask the elephant in the room question, and I'm going to go a little bit off script here, because I'm not sure we've talked about it a lot, and I think it's relevant, sorry, Matthias, to the Raiffeisen discussion, but overlooming, this whole thing about banking and what's going on. Obviously, the Russia-Ukrainian situation's ongoing. Obviously, some of the banks that have been playing in those markets, international banks, have pulled out. I know that Raiffeisen has come under a lot of pressure, as I believe the largest international bank with the largest exposure of about 23 billion, a little bit more than you guys. But can you just share a little bit about the inner workings there? I know it's not public right now as to how you're going to handle that, because that's a big exposure, but maybe it also talks to some of the other potential issues that we could face in some of the other issues or shoes falling coming down the road in some of the complexities of the world that we live in today?
Yeah, sure. I mean, you mentioned Russia. Our subsidiary there is substantial. It contributes roughly 50% to the net profit of the whole group. So therefore, in comparison to other banks, it's a more difficult decision about how to proceed there. And I think that's important to know. The second thing I think we need to know is that the Russian entity is ring-fenced, so there are no guarantees, no liquidity flow coming from Austria. So what we have at stake here in RBI in Vienna is our equity, and this is roughly 3 billion of euros, which is at stake. And what we need to admit, unfortunately, is that there are limited options about what to do and how to move forward. Everything you want to do is quite limited because due to the regulations, because you need approval from the authorities, and even if you could sell, then the question is who would buy it and who can buy it, because most Russian banks are sanctioned, and therefore, unfortunately, yeah, we're still struggling to find a solution. Some of the plans have become public, unfortunately. So you can see that there is different options being assessed, but at this point in time, I cannot really tell whether or when this will materialize.
Thank you. We are out of time. I think we've gone over, but since James was way over, I figured we'd just take 2 more seconds. And just mention that CPI is essentially a family-owned but Frankfurt-listed company. About 11% is free float on the Frankfurt Exchange, but it's owned by a family. So to some extent, that's interesting because they operate as a public company, but they decision make as a private family office, I would assume. I don't know, you know better. But that may make it more resilient in assuming that there are dark clouds on the horizon. You as CPI might be a bit more flexible in trying to approach that storm if there is a storm coming. And I don't want to end on a down note, but is that true?
Yeah, and I would say that that's also our advantage, that we are primarily single shareholder owned company. We're able to make quick decisions and decisions that are for the long term, because we're not necessarily bound by quarterly profits or anything like that. So our view is always long term. We want to be a long-term property holder. We want to continue being a leader in the CEE region, and that's how we view our strategies going forward.
Great. So I guess my advice is any people out there in the audience that want to build their business or segue their business or do something with their business, if you haven't thought about CPI Property Group in the past, you probably need to think about them in the future. With that, thank you very much, Mindy. Thank you very much, Matthias. Thank you all.